Hi, I'm Rhys Gadsby, Senior Economist at Glenigan, and in today's video we're going to take a look and analyse construction industry performance during the 3 months to the end of January 2022. Now in this video, firstly I'm going to give an overview of how the industry has fared during that period before moving on to some interesting stories in different sectors. Let's start with the development pipeline. The value of detailed planning approvals averaged just shy of £9 billion per month during the period. Now this was a fall against the previous year, but purely due to major project approvals, and they are all those larger than £100 million in value. When you look at the underlying market, which is the rest of the project approvals in the industry, you can see that development pipeline is actually incredibly strong. Underlying approvals averaged a record high £7.8 billion per month during the period, and this was really strong growth against the previous year and preceding 3 months. This is what really matters when looking at the development pipeline, as this is the work that's going to drive sector activity in the coming years. Moving on to main contract awards, the value averaged £7.5 billion a month during the period. Now this was a fall against the previous year and preceding 3 months, and like approvals, this was largely due to major project contract awards. Underlying contract awards averaged £6.1 billion per month during the period. Now this was a decline against the previous year and preceding 3 months, but the figure is still really healthy when viewed in the context of previous years. Having seen contract awards consistently higher than £6 billion per month since November 2020, it's a real confidence boost for the construction industry going forward. Project starts don't paint quite a positive picture. They were extremely low during the 3 months to January. The average value of those per month averaged just shy of £4.6 billion per month, which is a very strong fall on both the previous year and the previous 3 month period. Unfortunately, underlying starts have struggled in recent months, and as you can see from the chart, have declined ever since March 2021. Major project starts were also quite weak. The average value of those was £1 billion per month during the period, and this is the first time it's gone lower than £1 billion since the summer of 2019. Issues surrounding the cost and supply of materials are continuing to have such a big impact on project starts. Supply issues are beginning to ease, offering some light at the end of the tunnel, but the spiralling cost of materials isn't expected to calm until at least the middle of this year. Due to this, a recovery in project starts is likely to be quite slow. Now I'm going to run through a few sector highlights from this month's construction review, and as I have done in multiple videos in the past, I'm going to talk about industrial. The pandemic has had such a huge impact on the sector, with planning approvals being clear evidence of this. The value averaged £1.25 billion during the period, which is almost double that of the previous year, and incredibly the value was 140% higher than the same period 2 years ago, which was just before the pandemic began to take effect in the UK. Now this really does show the growth that the sector is experiencing currently. And what is very encouraging is that growth was almost entirely due to underlying approvals. Now, as you can see from the chart, they experienced such sharp growth during the latest 3 month period to smash the record set a few months ago. Now this is great news for the industrial sector going forward, and I expect it to just continue on climbing. Next, I want to talk about the residential sector, which had an incredibly mixed period during the 3 months to January. On the one hand, approvals are very high, and particularly underlying approvals, which averaged £4.4 billion per month. Encouragingly, underlying approvals have increased now for 5 months in a row, and apart from a strong period in spring last year, this is the highest level the sector has experienced for some time. But on the other hand, the value of residential starts has continued to decline. The value averaged just shy of £1.9 billion during the period. Only once has this number been below £2 billion since 2017, and that was during the first national lockdown of 2020. Just like overall underlying construction starts, underlying residential starts have continuously declined since March 2021. It's clear that issues surrounding materials that I discussed earlier is having a relatively hard impact on the sector, more so than other sectors. However, once resolved, the sector definitely has the potential to bounce back sharply. To summarise, while data initially paints a concerning picture of industry performance with declining figures across the board, this needs to be taken in context of the strong performances we saw last year as the market bounced back from COVID. But there's actually much to be encouraged about. particularly with the underlying development pipeline looking so healthy. But that's it from me. If you'd like to learn about performances for your regions and your sectors, please download the latest construction review using the link in the description box below. But other than that, take care and we'll see you next month.